This line that you see here, going up and down, is one of the most overlooked indicators for Bitcoin. It has accurately called every major Bitcoin cycle in the last 15 years. When it moves up, Bitcoin rallies. When it rolls over, Bitcoin drops. This line right here is the ISM Manufacturing PMI. Now you might be wondering, what exactly is the PMI and why does it have such a strong influence on Bitcoin? The ISM Manufacturing PMI is a monthly survey that tracks whether US manufacturing is expanding or contracting. When the PMI is above 50, it signals expansion as factories are producing more, orders are rising, and the economy is picking up speed. Below 50 means contraction as businesses are cutting back, and growth is slowing. And when the PMI is around 50, it suggests the economy is in a neutral state, so neither expanding nor contracting. Every time the PMI rises sharply from below 50, it marks the beginning of a new economic cycle, like we saw in 2012, 2016, and 2020. This is what's called a cyclical recovery. And historically, that's when Bitcoin tends to launch into its strongest rallies. Why? Because economic acceleration improves credit conditions, boosts investor confidence, and unlocks more speculative capital, all of which are fuel for risk assets like Bitcoin. And the opposite happens when the PMI falls from high levels to under 50, indicating an economic contraction, like in 2013, 2018, and 2021. These are instances when Bitcoin also tends to see its sharpest drawdowns. And this relationship should hold true now more than ever. The reason is, Bitcoin is no longer just a retail-driven asset. Over the past few years, institutional ownership has grown significantly. These players don't trade on hype, they respond to macro conditions. For example, institutional inflows into US spot Bitcoin ETFs surged in the first quarter of 2024, right after the Federal Reserve, the US central bank, signaled a shift toward easier monetary policy through potential rate cuts. BlackRock's Bitcoin ETF alone saw over $13.9 billion in inflows during that period, closely tracking the shift in macro sentiment. If we look at the PMI's recent cycle, it peaked in March 2021 and declined to 47 by late 2022, signaling a contraction in US manufacturing. Since then, the data has been choppy, short bursts of improvement with rallies on Bitcoin, followed by renewed slowdowns and pullbacks on Bitcoin. Today, the PMI is still hovering near the 50 mark, telling us that the economy is neutral. But if the PMI starts to turn up from here, it would put us in the same kind of macro environment that has historically fueled major Bitcoin rallies. So the real question is, what could actually drive a manufacturing rebound right now? By the way, we are currently doing a 30% discount on our crypto trading membership. Our mission is to provide access to profitable trade ideas to as many people as possible. And so, we're doing this discount so you can lock in our service at a ridiculously cheap price. Our trade ideas have allowed our members to make some incredible gains in the month of April, with our top trader securing a 351% total profit in the month of April, with a 92% win rate. We don't do discounts on our service like this very often, so make sure you don't miss it. So what could actually spark a turnaround in US manufacturing from here? There are two key factors at play. First, the Fed has been lowering rates. Over the past 8 months, the US Federal Reserve has shifted into an easing cycle, which simply means it's cutting interest rates to stimulate growth. The Fed did its first rate cut on September 18th, 2024. Since then, it has continued to lower interest rates in response to softening economic data and declining inflation pressures. Historically, the Fed tends to cut rates during or after a recession, but this time, no official recession by the NBER has occurred. In the past 60 years, there have only been 3 other times when the Fed began cutting rates outside of a recession. That was in 1966, 1984, and 1995. Now, if we add the PMI on top, we can see that in each of those cases, the PMI reaccelerated 6 to 12 months after the first rate cut. This is because lower interest rates eventually loosened financial conditions, improved credit availability, and boosted business activity, leading to a manufacturing rebound. Right now, we're 8 months past the Fed's first cut, placing us right in the historical sweet spot where recoveries have typically begun. If history repeats or even rhymes, we could soon see the PMI begin to climb again soon. And if that happens, it wouldn't just mark a manufacturing rebound. It could signal the start of another strong move up for Bitcoin. And the second key factor that could drive a manufacturing rebound is the US dollar. While rate cuts tend to stimulate domestic demand, the dollar impacts global demand for US goods. And lately, we've seen a clear trend of the US dollar weakening. Since the beginning of 2025, the dollar has fallen by over 8% from its highs. This kind of sustained decline doesn't happen often. When it does, it tends to have powerful effects for the US economy. One of the clearest relationships we see is between the dollar and the ISM manufacturing PMI. When the dollar strengthens, like here in 2014, 2018, and 2022, the PMI tends to fall. And when the dollar weakens, like here in 2010, 2016, and 2020, the PMI usually rises. Why does this happen? Well, because a weaker dollar makes US exports cheaper and more competitive overseas. That boosts foreign demand for American-made goods, leading to higher factory orders and stronger manufacturing output. Exactly what the PMI measures. Today, with the Fed easing and inflation cooling, there's a strong case for continued dollar weakness. And that could trigger the PMI to reaccelerate soon. So today, two major forces could be setting the stage for a manufacturing rebound: falling interest rates and a weakening US dollar. And if the PMI starts rising from here, it wouldn't just signal economic strength, but it could also trigger the next big move up on Bitcoin. That's the macro setup we're watching closely today. In the near term, Bitcoin has already rallied over 40% from the April lows, reclaiming three major moving averages it had briefly lost. This kind of recovery has only happened 2 times since the current bull cycle began in November 2022. Once in October 2023, and again in October 2024. And in both instances, Bitcoin went on to hit new all-time highs shortly after. However, after such a strong rally, a short-term pullback seems likely, especially as the US stock market also looks overextended. A move back down to the key moving averages, around $95,000, would not only be healthy, but should present a high probability buying opportunity heading into the next leg of the cycle. By the way, we've made 185% profit in the past month alone. Trades like MEXC, Wild, and CHR have helped our members make 233%, 278%, and even 463% gains. If you want access to these kinds of trade setups, along with quick market updates, exact buy and sell levels, and a crypto community for idea sharing, now is the time to join our crypto service. Click the link in the description below to get your 30% off before the deal ends.